Today, we are going to explore whether there's any sense in a recent spree of acquisitions done by AIMS APAC Reit. Now, most REITs will go for acquisitions, but you, as a REIT investor, do the REITs make the kind of acquisitions that will be accretive for you? Do you actually have that level of margin of safety for protection as an investor when the REITs made acquisition? Of course, if you look at the materials that the REITs furnish you, they will tell you that it's actually GPU accretive, but then you have to analyze in what format. A good example is AIMS acquisitions. They are largely financed by perpetual securities. Now, the thing is that the definition of perpetual securities in the REIT's definition of gearing is that 50% goes into loaned and 50% to equity. Now, what happens if effectively these are all classified as loans? And shouldn't it all be classified as loans for you as an investor when you look at the REIT conservatively? Well, these are the issues, and these are the key things we're going to delve into in today's video, as well as in our class on this particular Saturday. So once again, if you like what you see, do subscribe and hit the smash button. Okay, on page 124 and 125, I've shared a link, the experiences of REITs, and in this case, in particular, on AIMS APAC Reit. You notice from the share price chart, since 2015, right up to just before the sell-off in COVID of March 2020. That is actually year 6, 2016, 7, 8, 9, 10, and 20. Now, so effectively for 6 years, the share price has been range bound between 128 on the low side and 148 on the high side. And when COVID comes, it got smashed down to close to $1. And that's where we told our REIT investors in our classes to buy. But in my book on page 145, I've shared at length, okay, the key reasons why AIMS in the first place did not perform for the last 6 years. And then it crashed, and why it became a good buy when the share price hit $1 at this level of March, April, June, July of last year. Henceforth, the share price have risen almost 50%. And kudos to our REIT investor students that have made good money on that. But we did tell you at close to 160, you should be considering to bail out of the stock. Why? That's because if you look at the recent spree of AIMS investments, these are the ones that are responsible for sending up the share price, right? That's because after a hiatus of 6 years, they have gone on a hiring spree. But you as the REIT investor, ladies and gentlemen, you must be sagacious and perspicacious. So you need to actually look at this acquisitions in detail. So in our classes this Saturday, we're going to look into the fact that, hey, when they first acquired the Jurong West Logistics, they guided that the yield is 7%. But really it's 7%? Because if you look deeper, they say that based on the total acquisition cost, the yield is much lower at 6.76%. Now, what does it mean for you as the sagacious REIT investor? Second example is that earlier in this year, they bought 315 Alexandra Road, one of their largest acquisitions at 102 million. And guess what? They indicated that the yield is, NPI yield is 6.2%. Again, sounds good, okay? But if you look at the overall yield on total acquisition cost, is actually much lower at 5.9%. So once again, ladies and gentlemen, what does it mean to you as a REIT investor? Do you have the protection in terms of the margin of safety, as well as looking at the financing structure? Because if you come to the third one that they actually have, they say that the acquisition of this Woolworth HQ, which was done just last month, is a astronomical 454 million, but it's done at a yield of 5.1%. 5.7%. Mind you, ladies and gentlemen, I and my wife, as well as the family, we have lived in Melbourne for the last 13 years and are still living there. In the last 10 years alone, industrial assets like this particular one has gone up 50%. Does it actually make sense to even still buy at this level, right? So, and when they buy at this level, they are saying that the latest results they have, the balance sheet, the aggregate, the gearing is only 25%. Of course, it's because they just issue the perks. And as I told you from the beginning, the classification of perks, to me, is a little bit different, for presenting margin of safety for investors. So in our class on this Saturday, as well as when we look at recent REIT acquisition, as well as this one by AIMS, we will delve into the fact, to what extent are you protected as an investor based on this financing structure? Not only for AIMS, but as well as other REITs acquisitions. So do join us and also subscribe. And in next week's video, ladies and gentlemen, we will be looking at what the Business Times say today. Look at what Business Times say today. Yes, they say that ARA logos investors should vote for the upcoming ESR ARA logos merger. Now, how valid is that? We guide you once again, to help you make a better decision, as well to accept what level to accept. And when you accept, at that price levels that being paid, for example, whether you're getting a fair deal. So once again, join up for our classes and subscribe for our smash the subscribe button and join us again for our next week's video.